Hi, so Charlie giving you Friday's video. No live trading video today because I'm in London today, but I've titled this video "What's the best trading indicator there is," or something like that. I would have written down. And really, the best trading indicator you have, the first and foremost trading indicator you have, is price. So I have indicators on my charts. I like using things like moving averages and such likes. But the reality is the first and the thing that I'm looking at first when I'm looking at a chart is not what all the different colored lines are doing on my screen. It's what's the price doing. So it's a bit like the Matrix, really. I'm so used to looking at charts that I don't need to take everything off all the time. Having said that, taking everything off is sometimes a good thing to do, isn't it? We can all agree on that. So taking whatever indicators you might have on a chart off and just going back to a nice, clean, clear chart can sometimes be a really nice, simple thing to do. And then you just lose the noise, or if you're feeling that there's noise on your charts, and just look at the price action. Where are we trying to go? Where's the last prior lows? Where's the last prior highs? Where are we currently? And then start to build from there. So for me, even looking at this chart, this is what a 60-minute chart of the euro dollar. We can see that we've had a significant down bar back here. Obviously that was from FOMC on Wednesday evening. I'm recording this Thursday evening, by the way. So okay, so we've got that. We're back into sort of this mid-range since the euro dollar's had this move up. So okay, now let's work our way through time frames. So I'm literally just going to keep the scale as it is and just work our way through through time frames. So if we go to a 4-hour chart next, so just looking at this time frame and this scale without seeing any other information. Now obviously what we should do is zoom out and see what other information there is, but we can see, and I'm just going to draw this on, but there's obviously something going on from back here. So we can see that this is obviously a significant, with the data that we have here, this is a significant line. So if I'm looking at pure price action, I know that this is an important zone here. We've come down to this area twice here. We've plowed through it here, but then we've come back up, taken this little high out over here, and we're back down into this zone. So this is obviously an important area at the moment. So I would be saying, okay, this is, I'm looking at a price chart and just well aware of what's going on in the past, which may affect the future. So we know that we've come back up to it, we've come back down again, but we're still there or thereabouts at the moment. So this is going to be an important zone for us as to whether the market is going to bounce back off of this zone, having pulled back to retest it, or whether it's going to continue to the downside. And if it does start to continue to the downside, we know where this market should want to go, which is down in this zone down here. Nice, simple stuff. If it starts bouncing back up, then it should want to come back up for this zone up here. And all of a sudden you start to build a story. And I know we've put other videos out similar to this in the past, but that's all you do. And I'm literally now going to go to a daily chart. So let's now look at the daily with exactly the same zoom in on it. What can we see with the daily chart? So certainly there's some levels, and we can argue that this is a market which is making a series of lower lows overall. A series of lower lows overall, and generally speaking lower highs. So okay, so we can say that although we can see this price action is very sloppy here on the euro dollar on the daily charts, that generally speaking it has been making these new lows on the daily chart. So therefore, could we expect it to come lower? Okay, let's go out to the weekly chart. There's our weekly chart. So now we can see a bit more information by changing our zoom again, and we can see we've got an old trend line that I've left on my chart here, and there's an old trend line up there. This trend line dates all the way back to 2001. You'll see it when I go to a monthly chart shortly. And then we start to do that analysis again on that chart. I've actually got a horizontal line here, which is still on the chart there as well. So we can see that we're close to this trend line down here, but we haven't quite got there. So maybe it's just going to trundle its way lower towards this this line down here. But what we can also see by just using a price action chart is that this is a market which is building within a much bigger pattern here, which if I now go to a monthly chart, we can now see that trend line all the way back from 2000, 2001, and we can see that this is winding its way up, building within this triangle type pattern overall here. So very quickly, when you're doing analysis, you can then start to put some building blocks together and say, oh, okay, right from a very small time frame, like the hourly chart we were just going through, then the 4-hour charts, all the way up to, let's say, a monthly chart, and then start to build a picture as to what are the smaller trends and the smaller supports and resistance, which are going to be important to us, much like I think I went through on that 4-hour chart there with these lows here. And in the very near future, we've either got a break lower down to these lows, or if we start to bounce up, then we're going to come back up and revisit that. That might be something for a short-term trader that's going to be really important to them. But someone who is more of a position trader or a swing trader, this 4-hour chart may not hold as much interest, and it's because they may be wanting to see more of what's going on the bigger time frame. For example, a short-term trader, if we started to bounce up and we got up into the 112.20 or area, the short-term trader may be then saying, okay, we're bouncing off of that level that I've just highlighted over here. Oops, around there. We're bouncing off that level now, right? I want to be on the long side and run it back up to these highs over here. Now that's very well for a short-term trader, but someone who's got a different timeline and time horizon may not be interested in the short-term nature of the market, because they may still be looking at it based on that weekly and monthly chart, where they're looking for overall the price action to still work its way to the downside. So it really does depend on who you are. But the main point of this video is, don't forget price action. A simple chart sometimes with highs and lows on it, a couple of trend lines, you'll be amazed at what it can open up in your eyes. Don't get me wrong, I like using indicators, but do make sure that you are watching the price action and not that little indicator that you might be using on your chart. Hopefully that helps this week's a good little reminder for what we should be doing as traders, and I'll be back in touch next week. Enjoy your weekends.